Market climbed today, but is the worst really behind us? Or is it just a calm before the next drop? Welcome to Daily Market Waves from Investing Angles, where every candle speaks, every Elliott Wave reveals, and we chart the turn before the herd even blinks. Tonight's lineup is loaded. Volatility is sitting in a danger zone. Don't get too comfortable. Dollar index loves being oversold. Or does it? TLT candles aren't whispering, they are shouting. Oil gearing up for the next leg lower, unless bulls pull a miracle. Gold and silver still kicking the decision can down the road. S&P 500, we break it down from every angle. Nasdaq, overlapping waves raise overlapping questions. And our special feature, Meta. Is it time to buckle up for a drop or a breakdown? Or a breakout? Let's dive into the charts and decode today's moves. And as usual, we start with the volatility index. This is the daily closure today. So what we are seeing is that the daily candles are technically bearish, and they potentially formed a top here on the index itself. However, on the futures, it's not as decisive as it could be. It is still holding about the 20 EMA support line, and this green candle is so far in the driver's seat. So that's still a decision to be made, and it's nothing very clear here. If we look at the 2-day frame, which will be closing tomorrow, this is indeed an important one. And I'd like to say that these red candles need to close below the low of the green one, which was formed at the end of previous week. If they fail, well, it will be another potential bullish candle. And we remember this was the weekly closure. It wasn't very well decided at the moment, although the candles were kind of bearish, but they were not very strong bearish, and they could possibly be a continuation candles. And another one, that the last one that we are talking about, this is potential bullish flag that we are talking about since last week. So far, the wave down is not impulsive, and there is a very good chance we are seeing a very significant flag being developed. That's the perspective for now. So far, these are the targets, but if volatility moves in the same way, with the same manner downward here, then we might need to adjust the targets. Let's see how it closes tomorrow. Now let's move on and have a look at the dollar index. What is it telling us? The candles might be starting to form a bottom. This is an inside candle today we have, and there is well, I highly doubt it's going to change in the next hour until the closure. So we consider this as an inside candle, potential for beginning of forming a bottom. And I'd like to mention that dollar index has been oversold for a while right now, and there is a possibility of a very strong reversal here. However, we need to see very clear reversal candles first. So far, there is none, and the 2-day frame will be closing tomorrow. We might see some information there. The weekly closed below the Bollinger Bands. It's not a very healthy sign. Usually we will see a bounce here. However, nothing is yet reported. And speaking about the midterm chart, this is the chart that we discussed earlier at the end of March. So far, dollar followed it very nicely for the red path, and my expectation is that it finds support and reverses somewhere between, in that overlapping area, somewhere between 96 and 98.3. That would be my expectation, and also an ideal bottom from multiple perspectives. Now let's talk about the bond market, and there are quite a few things to be discussed. First of all, I'd like to say that the daily candles today pulled back. However, they were not very strongly bearish, and all of them requires confirmation. If it happens or not, that's a big question. And because right now we can see that technically trends are bullish on the 5, 10, 20, and 30-year yields, and there is a very good chance that they will continue to stay so. Speaking about the 10-year yield, what we are seeing here is that last week it formed 3 white soldiers, and it is normal that it is pulling back a little bit, trying to consolidate before the next strong move. If we look at the daily candle, we already discussed it, it is bearish and expect another move lower. However, provided this strong support, I'm not quite convinced that this rally would be, this write down would be a very strong one. And the same thing on a 3-day frame. Just last week, a 10-year yield formed a bottom on the 3-day frame, and this candle tomorrow will be closing. We'll see what it makes. It looks like it is, if it stays like this, it will be just a consolidation candle in complete dark cloud cover. Most likely it will be a bullish continuation candle. Now, if we look at the 20-year yield chart that we discussed last week, there are several possibilities here. So first of all, the first wave was impulsive, and this could be wave 2 here completed, and this would be wave 1 of wave 3. So that's the possibility if we see a move like this. So this would be wave 3 immediately here. However, at this point, I cannot reject the possibility of forming an alternative wave 2, which would be a bigger flat for wave 2, and only after that wave 3 will start. Obviously, in this case, we might need to adjust the channel, and the slope will not be as sharp as initially thought. Well, however, the targets would remain pretty much the same. All right, so that tomorrow might be a very important day. So it will be a decision between immediately starting wave 3 or completing wave 2 first and then starting wave 3 or wave B. However, this is the very clean impulse of the bottom. Now let's have a look at TLT. TLT is concerning, very concerning. Last 2 weeks ago, we called a top, and after that, TLT dropped about 8.5%. Now it's bounced, and today's candle, unfortunately, it wasn't able to form a bottom. Instead, it formed another bearish continuation candle. Now we have a better chances to move lower. And this is a particularly concerning closure today. 10-day frame, and this particular formation is a very clean confirmation of a reversal on a Harami candle, or it's also resembling a tower top. I would say that in the next 10, 20, 30 days, we will see a decline, continuous decline. And just a reminder that the weekly frame on Friday closed with a strong bearish candle. So no surprises here. And with this 10-day frame closure, TLT just elevated bearish odds on the midterm frames. And if we look at the chart, nothing changed here, the same as we discussed before. So far, the perspective that this was wave 1 and the bounce for wave A, B, C potentially. However, I would like to say that considering the recent closure and recent technical events, I wouldn't be surprised if this wave A that I marked here becomes wave 2 and we are looking for another impulse down. And I am talking about this perspective. So the impulse starts here. This is wave 1, wave 2 potentially, and then it falls down, wave 3, 4, and 5. That's the perspective, another perspective to keep in mind. Well, that's what candles are shouting in the bond market. Now let's move on to our commodities section, and we will start with oil. So what we are seeing with oil candles today oil had a chance to move a little higher. However, it was rejected at the 8 days moving average, and now we have a bearish candle. And also on the 2-day frame we have a fresh failure of forming a bottom. Now we have 2 bearish frames here, very good chances to move down. And another candle that will be closing tomorrow, a very significant one, a 15-day frame, triple size the weekly. And in order to make a bullish candle, oil needs to rally about 20%. In order to make it, let's say, less bearish, oil needs to rally at least 10.5, 11% to make it less bearish, I'd like to emphasize. Well, it's still a very tall order, and I highly doubt it's gonna happen, considering the closure on the daily and 2-day frames. We still might see a little bounce, but I highly doubt it's gonna change things. Speaking about the short-term Elliott Wave, this is what we discussed in our weekly report, and no changes here. There are still possibility for extending wave B here in this way. For example, if it does like this, oil moves somewhere here, then it makes wave C for 2, and then it drops down. So this is another possible path that it might take here. Well, so far this A wave has been corrective, another wave correction potentially B. Let's see how it develops. So far this wave upward is corrective, and it has to resolve down one way or the other. Now let's move on to the next chart, and I'd like to discuss the technical perspective for oil. So this is the 4 months frame, and it is closing in 15 days. And so far it is on track to form a bearish MACD cross on the 4 months frame. Previously this cross happened only 4 times. It was in September 19, it was September 2012, and it was in January 2009, and it happened in 1997, and another one was here in 1990s. So generally, if we run some statistical estimates, what we would be looking for is, for oil, is to drop about 60 to 70% in this decline, and to land it somewhere between 50 and $30 per barrel. So that's the statistical estimate. And by the way, oil is already over 50% of the top of the most recent top that we called in June 2022, and we discussed this particular call in our recent video on commodities that we posted on Saturday. So you can review the calls there with all statistics and all the charts. Well, that's the perspective from technicals. And now if we look That's all for oil. And now let's have a look at these concerning candles. ExxonMobil, Chevron Corporation, and ConocoPhillips, they all closed today the 10-day frames with these huge bearish candles. No questions, these are bearish and very strong bearish engulfing, engulf two candles completely, and we would be looking for a continued move down. Whether it's going to be an immediate move or it is going to be a bounce or consolidation for several periods. Note that this is a 10-day frame. So if I'm talking about several periods, it might be like 20, 30 days of consolidation before moving lower. And I would like to highlight this particular formation. So we have three black crows here on the 10-day frame for ExxonMobil. This one. And now we have a very strong bearish engulfing. I think it is going down quite a bit. Now, the final one I'd like to share. This one, the chart, we already discussed it multiple times. This is ConocoPhillips, our forecast that we made on January 29th when the stock was about 101.56. Now it is 86.45 and continues to go down. I think it's already approaching our upper target, and we have quite a bit to move down, a lot of room. Well, that's the perspective for oil and oil companies. Now let's move on to gold and silver. There is no much decisive information here, just a few items I would like to highlight. So gold formed today an incomplete dark cloud cover, and it might be a bullish continuation or could be just an early reminder, early alert that we are coming to a top. And the critical thing happened is that RSI started to diverge strongly downward, and it could be an early alert, early warning that the price might go down also. So far, nothing is confirmed. This is just a bullish move, and if we see a confirmation tomorrow, let's say gold drops below the Friday's low, it will be a serious one to consider. Speaking about 2-day frame, the candle right now is not exactly bullish, but it has some bearishness in it. But again, we need to see a confirmation. The bigger concern I have is the GLD trust. What we were talking about in our latest review on commodities and gold, this particular formation, we have clear three gaps, and we have a spinning top or an evening star doji, potentially reversing the trend. And this small candle here, technically, even though it is green, it might be a confirmation for a reversal on this doji. However, I'd like to see a very strong one. Maybe we would need to wait for a day or two once we have larger frames to develop, particularly 2 and 3-day frames, when we see something similar. So far, the 2-day frame today closed with a potential spinning top. If it is confirmed in the next 2 days, there could be a bigger reversal. Speaking about silver, silver is still undecided. So the daily is bullish. Daily formed a tower bottom last week. However, the 2-day frame today, it failed to overcome this big red candle, and I'm very cautious right now. So we need to see what will happen on the bigger frames, and particularly this one, this is the 5-day frame and the 15-day frame. So they are closing tomorrow, and they will be extremely important from the candle's perspective. So I specified the levels here. So if silver closes below 31.951, it will be a very strong bearish move. If it closes below the 31.785, it would be an extreme bearish. And the same for 5-day frame. They will see if, obviously, if the 15-day frame moves slower, then the 5-day would also form a bearish formation. It would be a thrusting line. So tomorrow is a critically important day for silver. Speaking about the Elliott waves for silver, this is the chart that we discussed earlier last week, saying that silver potentially formed an impulse down, and we are looking for a corrective wave here. So what we are seeing here is a potential ending diagonal. So I'm having some trouble to recognize an impulse here. So it might be a challenging thing. So far it is in the target area. However, if it moves higher and reaches 33.3, for example, I would be considering as a part of an impulse upward, despite the very complex structure of this wave. However, I'd like to emphasize that tomorrow we have a very critical closure. And speaking about the SLV trust, which I also track, so far the daily is bullish, but the 2-day frame, similarly to silver, it failed to confirm a bottom. It needed a closure about 29.51. However, it didn't. And now we are looking for a potential falling 3 methods candle combo. 10-day frame, which also closed today, it was a bearish candle. However, I'd like to see a confirmation because it wasn't sufficient from the size perspective to flip this trend yet. Well, there are many things and many questions open for silver and gold, and we'll see how it closes tomorrow. It will be important. Well, now let's move on to the stock market, and we will start with S&P 500. So this is the map of closing prints, closing daily candles for SPY, QQQ, DIA, and IWM. The candles look bearish, so these are potentially hammers or hanging man candles. However, they moved higher and they are not very convincing either. So this is most likely a neutral stance right now until we see a confirmation in either path. So no clarity here. The only thing I wanted to highlight here is the freshly made death crosses 50 over 200 for SPY and QQQ, and it looks like IWM is on track for making even bigger death cross, 100 over 200 days moving average in the next couple of days, and Dow Jones is on track for 50 over 200. Now if we zoom out and look at the bigger frames which closed today, this is the 10-day frame, the things are starting to get clearer. So bear didn't go anywhere. These are clearly bearish candles for SPY, QQQ, DIA, and IWM. So these are continuation candles, and we are looking for lower lows. It doesn't mean that the lower low happens immediately. This is the 10-day frame, and we might still see a little bounce here, or at least an attempt to negate these candles. However, the chances for moving the next 10 days bearish are significant. And I would like to highlight here IWM or Russell formed an 8 by 20 EMA bearish cross on the 10-day frame already, being the first. Now let's have a look at the next chart. And this is MACD crosses. What is happening? The monthly MACD cross, every index is aligned here. But this is not everything. So I'd like to say that Russell, for example, if we switch to the 2 month frame and have a look at this, we are seeing that 2 month frame is already bearish and it's closing in 15 days. If this cross holds for another 2 weeks, then the index might be in big trouble, looking forward to continue its bearish path downward. Now let's have a look at Elliott waves. So what we are seeing here is a short-term frame and S&P 500 index potentially forming a bearish flag and trying to end it with a diagonal. So far, I'm not seeing an impulse in this wave, and it is not complete yet. I think that it has at least 1 or 2 waves, subwaves to complete this, to move higher, and 55.60 would be my ideal target for this one. If we look at the bigger frame, this is the wave, the initial wave that the index made since the middle of February. And right now, after this wave, I am looking for an extended wave B. And by the way, this wave B could be even more extended considering the timing. And I would be talking about this possibility. So this would be wave A, this would be wave B, and this would be wave C. So from timing perspective and some estimates, we might see a very critical market with lots of ups and downs until the end of May or even beginning of June. So that's another possibility right now. Well, that's for Elliott waves, and now let's have a look at the sectors. So the sectors here are not aligned, all of them. And what I'm seeing bullish is consumer staples, utilities. These are clearly bullish. Potentially bullish is healthcare. However, I would like to see a higher move before saying that this is for sure. At the same time, financials, technology, industrials, the biggest sectors are not quite bullish. So they were trying to form a bullish candle today and confirm a move higher. However, they failed. And the particular interest is the financial sector. So if we look at this one, we can see that it is right now balancing on the 200 days moving average, and it closed today below, getting rejected. And at the same time, we are seeing a very tiny but nevertheless valid 50 over 100 days moving average bearish cross. If you look at the shorter frame, and this is the one that we charted last week, this is a possibility of a bearish flag here, and I would say that we need to see a higher high before completing this flag. Well, and if it completes and if it breaks through this boundary line, then we would be looking for 41.37 type of target for the financial. Well, that's the perspective for the sectors. If we look at the larger companies, so far Microsoft is bullish with on neck. Amazon hasn't decided yet. Apple could be bearish, could be bullish. So we need to see another candle. Tesla is in a dangerous spot right now. I would say that the candle is bearish and it's pushed the price below the 8 days moving average, and the freshly made 50 by 200 days bearish cross is quite concerning. Speaking about Meta, we'll talk about Meta in a few minutes in our special feature today. Nvidia could be bullish, could be bearish, depending on the next day closure. The same for Google and the same for Berkshire. Well, now that's so there is no consensus on the big stocks, and most likely we need another day or two to see how they are closing. Now let's move on to the next chapter, and we will talk about Nasdaq Elliott Waves here. So from the perspective of Elliott Waves, Nasdaq short-term wave is much more clearer compared to S&P 500, and Nasdaq made so many overlaps that right now it's just plain impossible to consider this wave as an impulse. Most likely it's going to be a diagonal, and I would be looking for another higher high here, as I showed in this little zigzag, that this is gonna be a diagonal, potentially wave C. Once this wave C completes, we might see a very strong move down. However, this could be another possibility here. If it doesn't make a higher high, we might see an extended wave ABC correction. ABC, this would be this one I'm talking about. A, B, it's C correction. So we might see another wave down here, and wave C, and another wave down. Well, that's the perspective for Nasdaq. And now let's move on to our final part of discussion today, is Meta. Well, Meta closed today with bearish candle, bearish engulfing, and most likely it is going to go down. Speaking about the weekly frame, it was a very good chance for a bullish candle, but we will see how this closes the week. So far, it is trying to reject it. However, if we look at the bigger frame, which is 10-day frame and close today, Meta is clearly bearish. So now we have the two candles closing below the 20 period CMA, and now it's a strong resistance line. I would say the Meta is going down, and the next chart, the next frame to monitor would be the monthly one. And I'd like to say that Meta already formed a very strong tower top here, so the chances for April to be negative are very high. But this is not everything. This is a very big concern right now. I think that Meta is very well on track to forming a MACD bearish cross on the monthly frame, and this is going to be a very significant one. I would say that it will be more than double of the by size from the previous one. And the previous one, which happened in September 2021, at the end of 2021, it led to a decline to 76% for Meta. If this particular decline would be somewhat similar, then we would be looking for, well, this would be 75% of the top, and the price would be 189, 190, 200. Well, so if Meta drops towards 200, it wouldn't surprise me at all. So once the cross is made at the end of April, I will run a statistical piece trying to evaluate averages, ranges, and so on and so forth for this particular perspective. And now let's have a look at the chart. This is what we are looking for, the chart that we shared at the beginning of March when Meta was about 600. Right now it hit the bottom at 480. Well, and I think that this is only wave A of a bigger correction. And now if we are looking for potential to drop, just let me get back to 190, 200, well, it will be well somewhere here. And this would be another concern from the long-term perspective. So if Meta drops below its September 2021 high, it will invalidate an impulse upward, and we might need to recalculate our waves, trying to find another perspective. So far, if this is wave 4 and Meta is working on this one, it must stay above the September 2021 high. So let me measure it here. It was 384.33. So this would be the must not cross line. If it crosses this line in a couple of months, well, it would be a big trouble, and the path lower would be open. Well, that's all I wanted to say today, and let me wrap it up. From volatility's uneasy calm to oil's bearish build-up, today's market action gave plenty to think about. The dollar index may be oversold, but history shows it doesn't stay down quietly. TLT. The candles say there is more pain in store. Gold and silver, still undecided, still on edge. S&P 500 and Nasdaq. The wave maps are getting tangled, and something big could be next. At Meta, well, if you are holding on, maybe tighten that seatbelt. If you are done guessing and want to trade with structure, timing, and statistical edge, visit investingangles.com. Drop a ticker in the comments, maybe we chart it live. Like, share, subscribe, and smash that bell, because timing is everything, and the turn waits for no one. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.